Hey everybody, it's a quick update podcast here on the holiday on July 4th, 2023. Be safe with your fireworks, keep all your fingers, stay alive. I hate seeing stories about fireworks accidents. I'm not one of those people that's really into fireworks themselves. I like my fireworks to be in numbers and colors format. That's as exciting as it needs to be for me. And so this podcast, this video is going to talk about what I'm doing. Because I want to give good financial advice. I want to give financial advice that I can stand by. And so when I talk about things like the sports algorithms, which I do sell a bunch still, and people want to know, certainly at the beginning of the season, they want a copy of their sport so they can get going. And that's why I try to provide it, but it's become so exhausting to try to do this right all the time that the money has to be there, and the money's not there. I cannot tell you honestly that I make money betting on sports. I can tell you that overall I lose money betting on sports. So how can the algorithms be so great if I still can't win money consistently with them? Even though they do some good things, sports is just like that. So I prepare the sports when I can, but when I talk about like when people give me money to do something with and invest and say, can you build an algorithm for the stock market so that it can make money? I had shied away from that until COVID. And then when COVID struck, there were no sports. They canceled everything right there in the March 13th. It was like the Black Tuesday of sports, and everything stopped. So you had to do something else with your time. And that's when I built the stock market algorithm. And after all these years, I learned that purchasing options is the most volatile and fun way to play the stock market. And straddling companies is the most reliable way to make money on this speculative short-term investment, which is akin to gambling on sports. You get results very quickly by playing stock options. So it's like, where can you make consistent returns, positive returns in short periods of time so that you can continue to be active and actually doing this? And it became straddling stocks. And I'm so confident giving you advice based on what the algorithm is kicking out here, because my success ratio is literally from day one of starting to do this. I made money. And to this day, I made like last week, I made like over 20% on my portfolio doing this, just listening to the algorithm, picking the companies. And on top of that, whenever I tried to be myself and stray from what the algorithm is telling me to do, like I would try to only buy one side of the option and not both. Like I would be like, oh, this company, Tesla's gone way up. They're going to have to go down. I'll buy a put on Tesla. Or AMD. AMD's been going up forever. Advanced Micro Devices. I'm just going to keep buying just to call on them because they had a bad day, so they're going to have to recover. No, they just kept going down all week. Anytime I tried to stray from what the algorithm says to do, I lose. But if you just listen to it, it wins. And I'll show you why, and I'll show you how to read it, and I'll show you what I'm doing today to get this updated for the week, because I'm not done. I didn't get them all in. You have to grab certain information, strike prices and estimates of calls and puts. And it's information that you can't really gather in an automated fashion. I've looked up every which way from Sunday, and even the services that provide real-time quotes and stuff, they don't really have a way for you to query a specific strike price, specific call and put, because it's such a weird fluctuating market. And people manipulate it by putting different price points out there all the time, every second. So it's one of those things you have to look at. So let me explain what I look at and what I do. And then we'll talk about companies that it says to play, because we're going to sort this list. And the great thing about this Google Sheet is that it sorts itself and queries the stock's prices when the market opens, and it changes this boom number, which is really important. Like in its most basic form. All right, let me talk about Monday. And then we'll talk about, I guess, Airbnb, as we'll fetch some data for Airbnb, and I'll explain what I'm doing to get us complete answers. So on Monday was a short day. It was like a day that closed at 1. I made money on Monday, didn't do any buying at all because I was driving and whatever, but just passively looked at stuff when I'd pull over for gas. And so made some money. What did I make money on and why? The answer is I made money on leftover options from last week, because I already made money on those companies last week when I bought the pairs of options. And I'll explain what I did using this list and talk about what this list is advising you to do, like in its most basic form. AstraZeneca had the best moving day when it came to cost of options versus how much they moved and how much you could have made percentage wise on the day. If you sort this way, let's resort just to make sure that's correct. Yeah, it's still AstraZeneca, followed closely by MicroStrategy, meaning Bitcoin must have moved so much that its impact on MicroStrategy was so good that it blew past the cost of their strike price. So like in the AstraZeneca example, it cost you $341 to buy a call and a put option on AstraZeneca. I believe this was Monday morning before they opened. It's probably when I queried this price. And it was a strike price of 60 at 71. So they went down a bunch. Yeah, this is probably correct. This is probably where they were at Friday's close, was somewhere around 71. It would have cost you between $198 and $218 to buy the call option, and it would have cost you between $128 and $138 to buy the really valuable option in that equation, which apparently was the put option, because they dropped by $6 on Monday in like 3.5 hours of trading, right? Now, what happened there? I'm going to look them up, or we could ask Bing. Bing's really good at this. We're going to ask Bing here. We'll see what she says. I call it a her. Why did no, hold on. We're going to be a balanced answer. Why did AstraZeneca stock go down on Monday?
Searching for AstraZeneca stock down Monday. AstraZeneca's stock fell by nearly 8% on Monday due to concerns that their new lung cancer drug may not be as successful as hoped. The company reported results from an interim analysis of the Phase 3 TROPION-Lung01 study evaluating datopotamab deruxtecan, Dato-DXd, in patients with locally advanced or metastatic non-small cell lung cancer, NSCLC, treated with at least one prior therapy. The stock price was down 6.15% in pre-market trading to 67.17. The stock price was down 6.15% in pre-market trading to 67.17. The stock price was down 6.15%.
I think I stopped her by accident. So what we're going with there, okay, from cut to hold. Okay, so that's a great answer, because there's multiple things going on here when it comes to answering the question about whether or not this is a good purchase. All right, for example, this is from me doing this. I'm helping you read the algorithm because I want to give you advice that's great advice. And this algorithm coupled right there with AI technology gives you, I mean, an unbelievable advantage at finding the best deals and how to play them in a short period of time. So let me give you my assessment, which involves a couple things. My years, being in financial statement industry, like, accounting type work and reading financial statements, preparing them, and all kinds of experience understanding how stock price is related to financial statements, but also stock price is related to public perception and movement and all this. Let me explain what's going on here. I'm going to give a answer of AstraZeneca is not the best thing to purchase right now, for a few reasons. Even though right here, today's boom number is up at the top and they're number one, meaning they moved the most. Well, a couple reasons why they're not a great idea. They're a good idea. They're probably going to make money, meaning they're probably going to move more than $3.42 between now and Friday after having a day where they moved $6. But the news that came out about them was wishy-washy type news, meaning it's bad for the future. So they've got a drug candidate, I guess they were counting on for something not looking good. So that means it's something they've probably put a lot of money into and that they were counting on is having a bad go of it right now. Is that their only product? Obviously, no. No, obviously they have a lot of other things that they do. And you've got to look at their financials to be like, are they a sturdy company and are they going to recover? Is the movement that they're going to have be up or down? You don't know. That's why you're buying a call and a put at what is the price right now? Hold on. I need to update this actually to explain how we look at this, because we got information that makes me think that the movement of the company's stock, while will probably be enough based on what the current price is. I have to look in a separate place, so bear with me here. While the price right now, for example, let's change this to show what they are at today, because this is important. Because do you want to do this on Wednesday? Well, the strike price is now $65, and the low call is 66 to 74, and the put is 39 to 44. All right. Now this is now a super duper 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 cheap. Is that really right? Is it really only $111 for this? I'm going to change my tune on this. I was about to say don't buy it because it was $314. I know there's only 3 days left, so let's open this up for a little bit. I want to say this is actually not a bad purchase. This is so cheap now. That all they have to do is move $1.20 in either direction. Now there is a problem here though, which is they're only a $65 a share company. So they don't have a tremendous amount to move. Like when you look at something like MicroStrategy, they're a $377 share company, and they're tied to Bitcoin, which has its own weird type of fluctuations. So it wants to be more volatile. However, it's much more expensive. So let me just say something in summary about AstraZeneca. They're not a great buy for making a ton of money, but at $111 for the option, that is so low that they only have to move $1.25 or so for you to guarantee a profit before Friday. That is possible, even though there won't be that much movement on AstraZeneca anymore, because unless more different news comes out. I feel like that news is that's the type of news about a prospective drug not having good results is sometimes more of a one-day news, unless it was a huge thing they were investing in. And we'd have to dig even further into AI to answer that question. But just this here is very, very inexpensive. You can see that that's 566% more than they need to move for you to make money if they have a day like that on Wednesday, right? So I actually have to recommend this, sort of. I'm going to recommend it as like, yeah, they're probably going to move $1.25 in either direction. Like that's really good. But 3 days is also not long enough if you really care about this money. Like I wouldn't recommend sinking your entire life savings into buying AstraZeneca by call and put options for a 3-day period. That's crazy. That only gives you a few days. And they could flatten out and hardly move down, 50 cents one day and up 50 cents the next day. And then you're sitting back on Friday and you have no idea whether or not you're going to make any money, or they might not move because they're a lower share company. So it's not great like that. But let's make it a little bit sweeter, because I think what you are seeing is this is so distorted. This is so cheap, meaning people are not expecting any more news out of them. Let's push this out till the 14th period. Because now I would recommend buying options for more than a week when you can get a good deal on them. Well, what's the deal on them? Well, same $65 strike price is between $95 and $105, and the put is between 57 and 69. So some things that I look at is this spread range tight? Meaning, like, do you have a good idea of what you're going to pay for these options, and you're going to be able to sell them? The spread range is okay. It's not great at 13%. It's okay. It really needs to be less than 5% to be excellent, less than 10% to be good. 13 is kind of mediocre. So don't really like seeing that. But it's also only $163. Like, did you see that? Instead of us paying $111, now all of a sudden we got to put another $52 into it. It's $163, but they only need to move more than, basically $1.75 in either direction between now and not this Friday, next Friday, July 14th. This is a more secure bet that you're going to make some profit, because they moved 3.8 times that just on Monday. So why wouldn't they move $1.65 or more in either direction in the next 7 market days, nine calendar days? Why wouldn't they do that? they're probably going to do that. And that's why the algorithm puts this up top. And they even had a moving week last week because their rating last week was they were the 84th best company to straddle last week, according to my chopped together stats that are not perfect, but they're the best I could put together. So it means that they had that potential last week. So this is a buy tomorrow. I'm going to buy this on Wednesday. I'm going to wake up in the morning and I'm going to buy this because it's so cheap and it probably wins. And that's the way this works. Now, am I going to buy MicroStrategy? No, I'm not going to do that because even though it's got a lot of potential to make a lot of money, you're also risking a tremendous amount of money. The call and the put, the straddle, it's related on to how much the company moves from whatever price you name. So it's up or down, but it has to be in a direction. It doesn't want to go up one day, down the next day, and then land on your strike price. That's how you lose value. You have a $20 spread range when you're looking at MicroStrategy, right? Let me look at MicroStrategy for next week on the 14th. MSTR. The MicroStrategy option for the 14th, see how expensive this really gets, because this is the only thing I would consider is going out at least 9 days. Do not do 3 days. 3 days is not enough time. So they're currently at 377.50 strike, and it's between $1,705 and $1,820, and the put is between $1,645 and $1,765. Everybody, that's right, 3,400. 3,000, 3,400, call it dollars, 3,500, something. Yeah, $3,500 in options because they moved 35 bucks a day. How do you think this price got named? People have no idea how much they're going to move. So they're actually just taking today's boom number because they're like, we have no idea if MicroStrategy is going to go berserk and Bitcoin's going to go way up. Anytime Bitcoin starts going crazy, it's done some crazy things, and MicroStrategy is tied to it. Coinbase somewhat is tied to it. So you see these things go up. So are they going to go up? Are they going to go down? What's going to happen? Let's undo that error. But point is yeah, it's berserk, right? It's also way too expensive if you want to try to guarantee yourself profits, almost guarantee yourself profits or really risk less. Your range here is they got to move $1.65. Here they got to move $35 again in one direction between now. They probably will. The way the algorithm says that they're still probably going to do that, but it's much more risky. So I'm not going to recommend buying MicroStrategy because you could drop a few $1,000s if they bounce around and hang out at your strike price next week, and Bitcoin stays stable at something for a week. It could really hurt you. So it's a total gamble there. And you can see it's about what you're risking. So when I'm giving you advice about which companies to buy, I care a lot about the risk because I keep seeing that work. Like when the options are not very expensive and the company's moving a higher percentage than it seems like it's priced into the market, they win. They just win. And so that's what the order is here. Like all these things that are green over here and low cost over here, that's apparently Dollar Tree, Abbott Labs. I bought Abbott Labs last week, made money on them, no problem. I didn't buy Campbell Soup. I bought Johnson & Johnson, made money on it, no problem. Last week, like you should just do it again. I mean, they're cheap. They move more than they should. According to what it just happens. You see, like I didn't do McDonald's. I've talked about McDonald's in the past because the thing about McDonald's is they've got this really high share price, and they're not that expensive. Like you can see, you can get them for like $300, and they have these. They don't move a lot though, so it's tough to always hit them. But if you give yourself some time, you can see that's actually one of the more expensive ones. It's really green here. The Campbell Soup is amazing that it's so cheap. Like it's clearly possible, but they're a very low share price. You want higher share prices, right? I haven't ever done Expedia. I'm going to look into that and see what those prices are. But I have to update all these companies to know what to do. I've used Waste Management in the past, haven't we all? They've worked out well. Super cheap options, pretty high share price at $170. Like there's a lot of reasons why this works. Taiwan Semiconductor, I've lost some money on before. It looks like their options price have gotten cheaper. I remember buying them when they were like $500 or so for both of them. So I overpaid when I lost with Taiwan Semiconductor. That's why it's really important to look at the total cost of the options. For example, let's sort this ascending real quick. This is another way to look at this list. What are the cheapest options? Altria, that's like cigarettes. Cisco, yeah, Cisco I made money on. Kroger I made money on. Citigroup I think I lost money on, but I got a really bad week with them. I did lose money on Citigroup when I tried it. Wells Fargo I made money on. eBay I lost, but I caught them on a bad week. Anheuser-Busch I made money on. I mean, Anheuser-Busch. What are they at per share now? 57. You can't avoid the news that drunken rednecks refuse to buy Bud Light products. Like that one is you know what happened here? I like doing podcasts about this stuff because I keep seeing stories about this and it makes a ton of sense. Is Budweiser just accidentally threw themselves into this hot button social issue and they hit the nerve, which it was like, I think what happened was people that are anti the whole everyone expressing themselves as a they, them, and dressing up like different sexes or genders or whatever. It's something that's foreign to a lot of people and elicits a strong reaction. And the when I'm drunk reaction to seeing to seeing your beer that you always remember being a certain color all of a sudden in the rainbow mixed with the Dylan Mulvaney thing. It just was like everyone had this drunk throw the beer down anger. And that is, yeah, it's not going away anytime soon because you're almost making it like they made it making a statement now. And so they threw themselves into this issue. And when you're a business and you're trying to appeal to everybody, yes, you do not want to you don't want to horribly offend your base in the mode and the attitude that they're in. So it's true. If you wherever you go to see the Bud Light, like the stacks are full. It's amazing. And they are not recovering right away. They're going to try. I saw them put like Travis Kelce and Patrick Mahomes in an ad. Do I want to like try to come up with a way that they can succeed here? But I mean, their stock will move. It's moved so much, and it shows you that their options are still pretty cheap. So they're generally a pretty good buy here, but their share price is so low. So it's not the best company, but you can see they're still green on this list. Like they move more than they need to, right? Now, are they just going to keep going down? I think so. I think they are just going to keep going down until what happens? Until they might even have to change their name. Can you imagine that? I actually think that's probably a good idea. That's what they could do. Because the one thing that works is changing names. If Bud Light all of a sudden got smeared as the drink you cannot buy if you're going to a straight party, right? Unless you're buying it as a joke. Like maybe people buy it. That's their sales now, is people buy it as jokes for people's, birthdays and stuff like that, office parties. Somebody that they knew, somebody goes and buys the rainbow version of Bud Light as a collector's item for somebody who's totally offensive and racist. Something like that probably happens. That's pretty much all their sales at this point. They have to change their name. They have to change their name. And I don't know how you got to come up with cheap beer. They got to change their name. Wow. You know what? Instead of Bud Light, it needs to be Bud Right. Bud Right, the right-wing version of Bud Light. That's the only way to do it. There has to be some like mutiny within the Budweiser executives to say, we're with you, anti-trans people. We're coming out with Bud Right. I don't know what's going to be on that label, but until they do something like that, Bud Light just seems to have semi-permanently got a stain on it that doesn't come out with alcohol. Yeah. So it's just a fascinating story. And one of the reasons I like following the market is you get to watch these stories and how they affect stocks. And I didn't get into buying a straddle option on Bud Light until just about like 3 weeks ago, maybe 2 or 3 weeks ago. I did it and I made money right away on my put because it just kept going down. And they hardly ever they made a little bit of a comeback on one of the days, but I think my call expired worthless. But I made more on my put than the cost of both of them because they just keep moving. Right. It's a story that never ends. And anyway, I just that's what I'm doing today is I'm updating prices and I'm reading into the stories and I'm asking AI questions about companies that moved. And I can tell you that you're gonna like my advice. I end up seeing a lot of the same companies, and I'll tell you my favorite companies. I don't know if they're always the best, but they've worked out for me, which is T-Mobile. T-Mobile is probably my favorite company other than AMD to do this with, but AMD is a little more expensive. T-Mobile is never that expensive. And man, did they like to move. They didn't move that much on Monday, but I hold the T-Mobile only because I already sold my other one I got last week for a profit. So I'm just left over with like a put option on them. So I hope they go down to like below 135, but they're already at 139 because you can tell I bought an option of them at 135 strike price. They're $4 over that. And I paid less than $300 for the options. So it's like they moved $400 with option value. It cost me $300 to buy them. So I sold one of the options for $400 or 380 or whatever I sold it for. Like the second day after I bought it. Like I bought it on a Wednesday, I sold it on a Thursday, I think. Like it's just already over. It's hilarious that it's that easy. And you're just sitting with the other option waiting for it to make money. There, as you can tell, they had an excellent week last week because they think they've recovered and moved up a lot. You know what happened with them like a month ago? Or 3 weeks ago, there was like this terrible news about telecoms because Amazon said they were like announcing their own Amazon was announcing phone service or something like that. And all the other telecoms went down like crazy on one Friday. I made like $700 on a T-Mobile option in like 5 minutes on a Friday morning and just sold it. Something I bought for, I bought for a total of 300 something bucks. I sold one for 900, like a day after I got it. They're a great company for doing this. They drastically move more than the cost of their options. So they're another one I recommend. Not for the 7th. We need to look at that for next week. That's what I'm not going to buy one for the 7th. It's too soon. What are they for the next week? The only reason I'm leaving the data for the 7th in here is because I need to track these week to week. So I'm going to have to write over what I'm doing with the old cost of last week's to get this right. But or we could do it this way. We could just leave it in there and give it 9 days. Point is how much does it cost right now? Well, our strike price is going to be 139 now, and the cost is 187 bucks to 196 bucks, and the put is between 131 and 138. So to have an option in T-Mobile that expires 9 days from now, or 7 market days from now, right? So 8 market days, Wednesday, Thursday, Friday, and then the next Monday through Friday, if all the days are open next week, and I think they are. It costs you 326 bucks, but it's not showing it on Monday. They didn't move a ton, but I know from experience that this is still a good deal for them. Like they move more than $3.50 in some direction almost every week. I have never lost with them. And even though they didn't have a great week 2 weeks ago, I just can tell you from experience I've never lost a straddle on T-Mobile, and I've done it at least 3 times, maybe 4, at least 3 times. So I will obviously do that again this week because that's what they do. Right? Doesn't show you today, but on like Wednesday, they'll move like $3 and you'll be like, oh, I see what Kenny was talking about now. I see what the algorithm was talking about right now because that 22 was there for last week. So hopefully I'm going to spend, $325 or less on those options and give myself, I recommend doing that just because historically they've been great. Another one, Procter and Gamble. Another one I've never lost on. I've bought it 3 different weeks and I have profited on it 3 different weeks. Not PPG, but Procter and Gamble. Where is it? Right, let's just go with Procter. There we go. They were 219th a couple weeks ago, 3 weeks ago. They were 135th last week. They are a company that's $152 a share and their options are cheap at 200 and something. What's their option for the one that expires on the 14th? Let's get that answer for everybody because it's important because I'm going to buy one of those tomorrow also because I do what I say. They're now, they're still at 150. They're between, they're between, 152.50 is the strike price now. They're between $130 and $139, and the put is between 30. Oh, wait a minute. Puts between 112 and 122. costs you $250. Does this company move more than $2.50 a share in 8 market days? Usually does. Right? They move a third of that on Monday on their short day. I keep winning with them. I'm going to tell you to buy them because you're probably going to win with them well. So what I'm saying is that if you buy these two options at the $152 strike price and you get them for about $250, that sometime, probably even before this Friday, honestly, they'll probably do it over the first 3 days. But otherwise, it'll probably happen sometime next week where they'll move more than $2.50 away from 150, 250. They'll either get below 150 or they'll get over 155-ish. And you'll be able to sell one of these options for more than $250. My historical profit on Procter & Gamble has been 10%. I haven't made the greatest sale. Sometimes I should have held it a little longer and sold more, but I've made 10% on average on them. So I'm saying that you're going to be able to sell one of these options for $275, probably for sure, like at some point between now and next Friday. And that's the way I approach it. Is I'm like, well, I try to make 10% on Procter & Gamble. I set my limit sale price at 275 and wait till it hits. You could raise that limit price and raise it to 300 and try to make 20% on them. You'll probably do it. Probably. But if you get the chance to sell it at a 10% profit, it's almost always a good idea to do that, especially if it's early on, because you still have the other option that you can sell later if they switch back and you've guaranteed yourself a profit. So these are the kind of things that I recommend. Our T-Mobile, Procter & Gamble. Is there anybody else I want to talk about that I just know is a good buy that I'm going to buy tomorrow? I own Kimberly-Clark. That is the only one I haven't profited yet. I've purchased them once in the past. Where are they? Where are you, Kimberly? That's the only one that I actually have active right now from last week that hasn't made money yet. They had a great week 3 weeks ago. They had a mediocre week last week. They're $137 a share company. And I paid a little over $200 for their options. I need them to move $2 before Friday. We'll see how that goes. They're not a super, super awesome one that I think is great, but they have had good results when I've had them in the past. I've never lost them, but I think I only bought them once previously. So we'll see how that goes. I don't want to recommend it as a great one. Well, what do I want to recommend? Boy, Cisco really does win. You see how they were number 19 3 weeks ago. I might consider this as well because it's super cheap, but I haven't looked into it. Campbell's also looks like something reasonable because it's so cheap. So cheap. Kroger I won with in the past. They're at 47. Yeah, all right. But they're super cheapy, so they're not necessarily the greatest thing. But man, when it comes to probably guaranteeing a small profit at least, that's a pretty good pick. IBM is usually a good one. I've never lost on IBM. Abbott Labs has been good recently. If you look at these numbers here, 42 and 60, it's also pretty cheap. So I think I'm going to buy an Abbott Labs tomorrow as well. I only bought them. Actually, I bought them a couple times. Have not lost on Abbott Labs. 2-0, I think I am on them. Morgan Stanley keeps showing up here, but I've never actually bought one. Canadian Solar is another good one. They're cheap. You can see they're up here. They move a lot, even though they're a lower share company, but they tend to move a lot. So that's another one that's very possible. It's all these companies I'm naming are probably going to win. So if I'm really talking about them for long, like Canadian Solar, Abbott Labs, T-Mobile, Procter & Gamble, I believe they're going to win. I'm going to buy them. I'm almost certainly going to buy them, and we're probably going to win with them. I had Medtronic once before, and I made money with them, but I'm going to stay away because their share price isn't that high. It's still $180. Keep looking. Merck I lost with last week, but I guess I you know what? I traded it poorly though. I think I had the option to profit, but didn't. IBM, always a winner. IBM has won every single week I've taken them. And I think I've taken them 3 times at least, maybe 4. They always win. So will they win again? I recommend it. Look, they were 157 last week. Not necessarily as great 3 weeks ago, but I'm pretty sure that was still even profitable. At some point throughout the week, just because this number is just where they finished. the week. So there may have been a potential for the company to have been profitable during this period, even when this number is low or high. When the number is high over here under like, how it did, that means that it didn't move enough from its strike price to what it finished at the end of the week. Those two were kind of close together, but they may have had fluctuations throughout the week where they were way up or way down, and then they just ended up coming back to a more median level. And so they may have made money. I know from experience that IBM has never lost, and that I've made money with IBM every single week. Kimberly Clark, I own. AbbVie, every time I've owned, they've won. They're also one where they have a deceptively high share price for low options generally, but you can see they're not great, but they're good. Roblox has been a winner. I own one leftover Roblox from already winning on Roblox last week. They just kept going up. I actually have I won twice with Roblox last week. I bought 2 different sets of options last week. One of them expiring here on the 7th. We should look at them through the 14th because they're going to be a buy. I mean, I can pretty much tell you that. They just move. They move around. You never know if it's going to be up or down, but they move around. That the stock has activity. And we're going to check that one, and then I'm going to finish off with the video because I just wanted to let you know what I'm doing, what kind of research I'm doing, and I want to give you great advice that actually makes money. And straddling these companies is great advice. I can say that from hitting the ground running immediately doing this, and also failing miserably trying to beat it on my own. It doesn't cost $42. It costs $151. Every time I try to just buy one option and try to skirt the system and not buy both of them, almost every time, I got spanked. And it was always a better idea for me to have straddled the company and buy both options. So you can get Roblox options for $290. That's starting to get a little more expensive, unfortunately. I would almost wait a little bit to try to get this down because as you can see, they moved $1.80 today. They probably moved $3 a share in the next 9 days. However, this is more expensive than normal. You want to get this lower. I can just say that from you. You can also see the order that we're in. The boom number just changed. I know you're going out 9 days, and that's why people are starting to realize they move so much that the premium gets bumped up a little bit and it costs more to buy them. So I probably won't buy a Roblox tomorrow because I want this to go down first. I want them to have a day where maybe they don't move, and you can get this for closer to like $220 or something like that. This looks a little expensive to me. So yeah, I'll end the podcast on that, but I just want you all to know that this is where I have a high degree of confidence that I can give you advice on how to play a specific type of market strategy, straddling options. It's not for everybody. It's not for the basic passive investor that doesn't want to pay attention to this and understand what's going on. It's for people that have asked me to use my skills to try to, analyze the stock market and do algorithms on the stock market. And the result that I came up with was, well, there's a way to gauge volatility. There's a way to only risk a certain smaller amount. That's what this total cost number is. I'm not telling you to buy these crazy options where there's a huge range that you have to hit. Like it costs $11,000 for AutoZone's options. They got to move $110 in either direction. I know they're a huge share price company at $24.83 a share, so they're almost $2,500 a share anyway. So they, of course, do go through fluctuations, but this is a massive, massive risk. They could settle somewhere in $110 range and never move for a week, and you could absolutely lose a ton of money. Don't like doing it that way. Go with the numbers. Go with where you risk much less based on what you're trying to have happen. The company doesn't have to move a ton. You're not putting a ton at risk. The possibility for profit is increased if they move drastically in either direction. So you can only lose so much, but you can make multiples of it if they move dramatically. So if you own a bunch of different straddle positions in different companies, and then the market in aggregate has drastic moves up or down for other macroeconomic reasons, you receive the benefits on all of your options if things move in tandem. And things don't have to move all that much from how they have been moving for that company for you to make money. So it means like you're putting yourself on a roller coaster where you expect there to be ups and downs. And as long as there are ups and downs during the period you own the option, you have opportunities to freeze profits and then watch the other one as a free roll because you've already freeze profits on the one you buy. It's fascinating that it's this easy, but I keep doing it and I keep winning. And so I'm going to do this every day more than talking about sports because I can't give you advice that comes in as frequently and wins as much as when I do it with this. This is a whole different animal. This is you taking advantage of what the market is, which is a free-flowing place where people are doing crazy things in and out with money all the time. And you don't know which way they're going to go, but you know that there's going to be waves. That's the thing. You're just predicting there are going to be waves every day and throughout the week, basically, is what you're doing. So I just felt the need to podcast about it because this is where I have to dedicate my time in order to put something out on YouTube that I think can benefit anyone who wants to wade into this pool and start riding the waves. I've convinced people to do it in the past. Some people that I thought I'd be able to convince, I haven't been able to convince, but also those who respect my ability to organize data and draw conclusions from it want to give me money and ask me generally for my advice on the market. It's amazing how many people that have a lot of money ask me for advice on the market. And I feel confident giving you this advice. And so I'll continue to do so. And you can really not expect a lot of awful surprises out of doing this. Like, how bad can it be, right? You buy Abbott Labs options for $140. How bad can it be? They don't move $1. They move 75 cents. You lose half of your investment, right? You lose $70. That would be a terrible example of what could happen. It could happen, but it's not going to happen every week. As a matter of fact, if you played them 3 weeks ago or last week, you made money just like I did. So you'll probably get some of it back if you keep doing the right companies. Now, there are the wrong companies. How do we find them? Then we're done with this video. The wrong companies are companies like this that have high red numbers here and that don't move a lot. Cracker Barrel, not a good one. They're $93 a share. Their options apparently cost a bunch. I think that's probably because they had earnings. That can't be right. It doesn't cost $700 for Cracker Barrel shares, does it? Hold on a second. CBRL. The next one, yeah, it does. And that's because they're separated out by, yeah, no, they're not a good one. Cracker Barrel is not a good one to do this with because they're only 90 some dollars a share and they only have options that are $5 apart, and the spread range on them is actually not that bad, 6%, but they're not a really good one. Not just because they didn't move much on Monday, but because they're just super expensive for their share price. Like there's a break-even amount they need to move. They need to move like $7.50, and they only move 2 cents. But why are they going to move $7? They're a $93 share company. Like why so expensive? It's because you have to pay for a lot of the premium because there aren't that many options, and the market probably isn't that deep for them. So there's a way, like I'm going to start removing these companies off the list because I'll realize you never want to buy them. Like they're never a good deal, right? And Cracker Barrel is probably one of those. Why is ServiceNow so bad up here? ServiceNow is extremely expensive. That's because they're a high share price company at 500 something a share. Spread range, okay. They're just super expensive, and then they can have a day like this where they hardly moved at all. Right? They moved 1 cent on Monday, and you need them to move $18 a share, $17 a share. So maybe they're not a good one. They didn't have a good week last week either, or they're overpriced. That's what you learn from looking at this stuff. And as the day opens up and this thing just automatically starts changing on Wednesday morning, different companies are going to pop up on here. And all of a sudden, in the middle of the day, you're going to be able to get some deals as the market adjusts to what is happening and where news is happening. And I don't want to guarantee you have to make money, but I almost want to. Because if you listen, if I've listened to this, I have not lost significantly on anything doing this. There have been almost no terrible surprises. You know what I lost on? I lost on a company like Costco, which the algorithm didn't really say to play. I just looked at one number, and I'll explain what I did. I did Costco down here, and I lost money on them. Not a ton, but I lost a few $100, even though they had a pretty good week last week. I bought them because their cost of their options based on their share price was really, really low. It's like, wow, they're a $500 share company. Their options don't cost $1,700 like ServiceNow. They only cost $800. I'm like, wow, they're probably going to move $8 or something, right? Well, the week I bought them, they didn't. They had a bad week, and I risked way too much. It's because they generally don't move a ton. Sure, you're going to make money on them sometimes. Some weeks they'll do it, but they're not consistent. They're not a company that people trade like crazy and have their options go berserk all the time, because they're a pretty expensive company, and they're also a brick and mortar type situation with more fixed prices, and their revenue and profit don't fluctuate in a way that is totally abnormal because of the way they're set up and the business model that they have. Like they don't open 400 new Costco stores in a month. Like they're a huge logistical operation. People have come to expect things out of them, like not raising the price of their hot dogs and their smoothies and their slices of pizza, even though they're not making money on them. But they find ways to do it. They're a good employer. They're a stable company, so they don't move like an unstable company. You want to find companies that are crazy unstable in both directions, because that's how you make money straddling a company, is you need them to move. So I made a mistake with Costco, even though they were relatively cheap and there were some signs to buy them. I made a mistake because they're still too expensive for what they are, even though I saw this juicy share price and thought I would go for it. No, you need to look at the list this way and at total cost. That's how you consistently win. And everything I've done has proven that to be true. So Procter & Gamble, T-Mobile, even Abbott Labs, because it's so cheap, even like Campbell's Soup, because it's so cheap. Like all these things, I'll have more information for you midday on Wednesday, as I'll make some midday purchases on Wednesday, in addition to definitely buying Procter & Gamble and T-Mobile, and whatever else I talked about in this video. I'll do that, but I want to just show you how great this really works. All right. And if you want to know more information about this or pick my brain about it or something, do it in the comments. And I'm not even going to sell a subscription to this yet. I want to just keep doing videos and giving you more specific advice, like I just did, like about T-Mobile. And yeah. All right. Good luck. May all your trades be volatile.